So there's two main types of life insurance. The first one's term. Term stands for terminate. For the if in life. If you die before you retire. They say it's like renting a house because when the lease is up, you give the keys back to the landlord and you're locked out. Make sense?
Yes.
All right, so let's say you were 35 years old when you bought a term policy and you were looking for $100,000 in coverage. Let's say it would cost you $30 a month. Now you turn 45. You buy insurance with age and health, not money. You pay for it with money. So what do you think it would cost when you turn 45? What do you think will happen?
It'll go up.
That's exactly right. The price goes up. You know, so that now let's say it'll be $50 a month. Now you turn 55. What do you think happens?
It's gonna go up.
That's exactly right. Let's say it'll get to $90 a month. Now you turn 65. What do you think happens?
It's gonna go up.
Actually, you usually can't get it anymore. You can't renew it at that point. And the issue is the average age of death in America is 83 for males, 87 for females. So what's happening is people with term coverage, they're going the last 25 years or the last quarter of their lives without any kind of coverage in place. And that's one of the biggest concerns that we have for our members as well. Does that make sense?
Yep.
Now, don't get me wrong. I'm not saying that term's bad. It's just important to understand what it's there to protect. It's really good to protect an income or a mortgage, things that you don't need to worry about after the age of retirement, right? But at the same time, what it's terrible for is anything guaranteed that's going to be there for your family. It actually only pays out 1% of the time. Whole life. Whole life is for the when in life, when you die. They say it's like owning a house because no matter what, if you bought property 30 years later, it's always going to be worth more than what you first paid for it. Make sense?
Mm-hmm.
So whole life is going to go up in value with time. So let's say you were 35, you wanted that same $100,000 of coverage. Instead of 30 a month, it might actually start at 80. But the difference is this. Every single year and every single month, the price will always stay the same. It'll never go up. It'll never go down. And whether you die tomorrow or when you're 100 years old, that $100,000 is guaranteed to be there for your family when you need it the most. Right? So what most of our members love about our whole life is, one, it protects you against inflation. Were you driving when gas was $1 a gallon?
Mm-hmm.
Don't you wish that at that point you're able to lock in that price forever?
Mm-hmm.
Right, it works the same way here. So whatever your age and health is when you purchase a whole life policy, in this example, this individual at 35 years old, he's going to pay the rates of a 35-year-old forever. Right? So it protects you against inflation. Secondly, it protects your budget. What I mean by that is they say after you pay a premium, after you pay a bill 4 months in a row, it usually becomes second nature. You don't really feel the sting of it anymore. With term, you can never really budget it in because the price will always change on you. It's not guaranteed. This actually gives you a chance to budget. But the third thing that our members love is that it works as a forced savings account. It builds cash value. So right now with your bank account, what's your typical savings? You know what your savings at with your savings account?
Yeah, 25%.
It's usually around 0.1%. Right, so you get about 0.1%. With a bank. With our whole life policy, you're getting a guaranteed 4.06% on your money. So that means every dollar you're putting into this is actually growing every single month. And if you're young and healthy enough when you first purchase this policy, by the time you turn the age of retirement, that money accumulates so quick you'll be able to pull out more money in cash than you ever paid into the policy in the first place. Does that make sense?
Mm-hmm.
You know, so that's the way that I explain it.